After gold, property has been considered as one of the most esteemed investments by our Indian ancestors. Now, everybody dreams of getting their own house and living independently, but this investment comes at a huge cost, which is not possible for an average income earner. Therefore, Securities and Exchange Board of India rolled out another option for individuals interested in real estate, and that is Real Estate Investment Trust, most commonly known as REITs. What are REITs and what are the pros and cons of investing in them? Let's find that out from Vivek Rathi, Director Research, Knight Frank India. Good evening, Vivek, and welcome to the show. Obviously, we're talking about real estate investment and REITs have actually been under spotlight. Now, the way REITs work, one needs to understand that you can really generate income by investing and being a part of REIT through getting your units placed in commercial real estate units. But before we go deep into it, tell me something. How are the REITs actually doing in the country since the time this concept was launched, and a couple of AMCs have come up with REITs also? How is it catching up in India in terms of investment, in terms of awareness?
Sure. Good evening, Kavita, to you and your listeners. So, in terms of the REIT, in the current avatar, REITs are only 4 5 years old into the system. And if you look at the commercial real estate market, which is what is the bedrock for the possibilities on REIT. Right now, we are only scratching the surface with just the office space REITs and just three of them out of the total universe of more than 800 million square feet of office stock that we have. This is under 15% of the total space which has been captured through these three REITs. Yes, there is a factor of retailable assets and so on, so this is the limited segment that you have access to right now as an investor in the REIT space. Now, how is it faring? For to understand how are these REITs faring, you'll have to see the backdrop of when these REITs were launched, right? So, like I highlighted, three of these REITs are on commercial office space properties, and if have two of them have come during the pandemic period, right? And in the backdrop, you had this pandemic shock, which kind of put up a question mark on the premise of office space to start with. And now, as we gradually came out, the return to office has come in full steam, and which is what is reflecting in the optimism that investors have on these REIT asset classes. So, despite the backdrop of the pandemic, which kind of affected work from office and physical occupancies in these office spaces. Right now, these REITs have witnessed stability on their occupancy levels and are looking up to improved leasing momentum, which ultimately translates into rentals and distributions for a REIT owner. So, on that account, specific to office asset class has been a satisfactory performance.
Tell me something about the trend that we are seeing and the kind of market we are witnessing when it comes to commercial real estate property. Residentials, we usually get a lot of reports and a lot of news. It's been there buzzing around. There's a lot of demand piling up over there. But then how about commercial real estate? And in that scenario, what kind of investor interest are we also talking about here when it comes to investing in REITs?
Yes, sure. So, the key premise of any real estate investor is the annuity returns that one captures through the rentals of accruing to the property, and the other component is the capital appreciation. So, in case of a REIT investors versus a residential investor, that is where the key difference comes in. So, from an annuity return perspective, which is annual returns influenced by the rental potential of that asset, is what becomes the key premise for any investor. So, the regulations that have been created on a REIT product uh, try to ensure that you have stable set of assets in terms of their life cycle of construction and occupancy levels, and the distribution of The income that these REIT generate happens on a fixed frequency with a defined amount of distributions to the REIT investors, which is what kind of creates a regulatory oversight for these REIT investors, ensuring a stable and growing income as the performance on underlying property improves going forward.
Tell me one thing, Vivek. Can any investor invest in a REITs of fund? And is there a capping? Is there a minimum investment that's needed? And if you could just explain this through any REIT fund, if one wants to invest in it, what will be the procedure? How can you select which is the right REIT fund? How do we analyze the kind of exposure a particular REIT fund has? Because real estate is needed for diversification in your portfolio, and if you want to do that through a REIT, what would be the process in terms of your minimum investment amount to selecting a fund? Tell us all.
So, in terms of the requirement from in retail investor or institutional investor perspective, there was a minimum investment size a few years ago, but now that no longer exists. So what that means is investor can buy the lowest denomination of that REIT unit which is available. Right now you have three REITs, which is the Embassy REIT, Brookfield REIT, and the Mindspace REIT. So while you will be best placed to consult as an investor, will be best placed to consult a financial advisor to determine which particular REIT should be preferred. But like I highlighted, three of these have a pedigree in terms of the promoters that they have are present across the top eight markets where the commercial activity remains strong. And in terms of the performance of the commercial market over the last 18 to 24 months as we came out of the pandemic, there has been a steady performance in terms of improving leasing volumes, which is what will reflect on the performance of these REITs when the distribution is made to the investor, or capital appreciation possibility, which will come from the rent escalations as they happen.
Tell me one thing, talking about the REITs which are available in India, do they also have international exposure, Vivek?
So, in the current set of regulations, the exposure to assets remain within the country. So, all of these assets have to be in the country, and there is no permission for foreign assets in these three guidelines.
So, in terms of commercial real estate, what kind of an investment through a REIT fund are we talking about? How are they actually picked up through a REIT fund, and what kind of exposure or a portfolio a REIT fund can have?
So, REIT will have a set of properties which are uh, majority ready, which would imply a threshold which SEBI has identified in terms of 75% or more, which has to be ready in the underlying assets. And within these underlying assets is when the REITs have to take the exposure. Now, with respect to these assets, the income which accrues to these assets will then be distributed to the unit holders, which is where the investors make money. So there are stock exchanges from where an investor can subscribe to these REITs depending on the suitability of these three specific ones.
That's the way an investor can earn returns on REITs.
So, in terms of whether, so there could be different forms of returns which could accrue, whether it is in terms of the fixed quarterly distributions that these REIT do, whether in form of interest or dividends, or the capital appreciation that will be captured on the movement of these REIT prices as they happen. So through these avenues, an investor can expect to make money out of the investment that they make. So yes, on the capital appreciation side, it could move in either directions, but the trend has been positive for the last 2.5, 3 years since that these REITs have been in existence, and distribution yields which happen every quarter in the range of say 6.5 to 7.5% per annum is what an investor makes subscribing to these units.
Any tax implication in this investment instrument?
So, lastly, so there are two components of these REITs, within which there will be a tax implication on a part of it, and other one which will not be. So, accordingly, an investor will have to choose which REIT, but largely, it will be a mix of both, tax deductible as well as non-taxable income which accrues.
Sure, sure. All right, so that will be all about REITs, and thank you so much, Vivek, for guiding our investor for this investment instrument.